I trade for about 2 hours a day and can make about $3,000 to $5,000 a session. But this wasn't the case 3 years ago when I got started and I was feeling completely lost. I was completely confused. I was starting to believe that trading may actually be a scam. I was feeling like I was wasting hours of my day of not hanging out, not going to beaches and parties for completely no reason. It took me years of trial and error just to figure out that I didn't need to pull out a miracle, or wait years and years just to master complicated trading concepts. And what's funny is that most traders don't know that once you have a repeatable and simple trading strategy to follow that is designed to scale, you can pretty much go from 100 to 250 plus a day, but that is only if you know how to do it and have a process. So that process is exactly what I'm gonna show you in this video. If you're working or you're in school or even logged in on trading, ready to go full force, this is gonna be a simple process to follow to lock in on trading without wasting time and money. So like I said, what I'm gonna be showing you today is basically modeled around trading for 1 to 2 hours per day, and it's how to start trading to be able to scale up to this goal. So the first thing I'm gonna be showing you is how to approach the market the correct way, and the way I'm gonna be doing this is by explaining the goal when we are trading. Step 2 is the tools and software you are going to need when you are getting started. Step 3 is a way for you to master the concept of trading psychology, which is undeniably the most hated concept on the market, but it's also the reason why some traders are way better than others, even though they share the exact same system. Step 4, after you have all of this knowledge, I'm gonna show you my simple and repeatable trading strategy, and this is the strategy that I use so as to be able to have some days like this. Okay, so let me treat you as a friend of mine so that I'm able to teach you everything that I've learned from trading so far. I think it's important to zoom out a bit and look at trading at its simplest form. It's really easy to get bogged down with information overload. So starting by understanding trading in its simplest form is what is going to allow you to add when necessary, but not override and confuse yourself, which is what happens to most people who are starting out and most people in general. To look in trading at its simplest form, we have to understand what we are looking at when we are looking at the chart. So when we are looking at the chart, we are looking at a visual representation of mass human psychology. There is period where the chart is moving down and periods where the chart is moving up. Now all we are looking at is basically a battle between buyers and sellers to determine which direction the market is going to take. So in this example, when price was going down, it meant that supply was less than the demand, until this level was hit where buyers stepped in and the demand started to outweigh the supply, causing the price to drive higher, until a major period right here where the same thing happened. Supply started to outweigh the demand, causing the price to go down. Same thing here, buyers stepped in, price is moving higher right now. Okay, what we're trying to achieve as traders is basically figuring out positions on the chart where we can enter, for example, one unit worth $100. So again, we are purchasing something that is worth $100, allowing that to increase and then later sell it for a higher valuation, for example here a $10 increase. So now this is very easy, but generally the way you want to calculate that is by doing last price minus buy price, and this will equal 110 minus 100 equals 10, and this is how we go here. If for example we bought 2 units of so, that would have been a $20 increase. The way we are going to do this is by figuring out, by doing analysis and finding patterns, areas that have a high probability to enter in. We are keeping our risk contained and then later sell it so as to be able to make 5 to 6 times what we are risking if we are wrong. Now if I do this on a real chart, based on our strategy, we have to get an entry right about here, place our stop loss pretty tight about here, and target higher prices. Now what I want you to focus now on is the risk to reward we are getting from those trades. In this example that I just found on the chart, we got 7.2 hours. That is basically, if we are risking $100 multiplied by 7.2, and that will equal 720 just from a single trade. So what we don't want to happen is have price go well below our red zone. If that happens, then we are losing minus 1 hour, which in this case, let's say it is $100. But on the other hand, if price goes on the green zone, that is when when we are making profit. In this example, our 1 hour is worth $100, and now take a look at this risk to reward ratio, that is 7.2. So assuming we close that trade for a profit, we made 7.2 multiplied by our 1 hour, which in this case is $100, and that is $720 out of a single position. By doing that, we get to keep 5, 6, sometimes 10 what we are risking on a single trade. Executing such ideas on a day-to-day basis is gonna allow us to slowly compound our wins and losses, giving us a net positive, which is what we call profitable trading. On the other hand though, if our losses surpass our wins, then that is what we call unprofitable trading. Obviously, there's a lot of things going behind it. You have to put yourself in the right position and have a profitable trading system that I'm gonna cover in the end of the video, because with that one, you are gonna turn this into a casino and you really don't want that. But before we get into that, first we need to go over all the tools and software you are going to need in order for you to start this process. So the first thing you are gonna need is TradingView, which is where you're gonna be doing all of your charting and your analysis. The second thing that you're going to need is a prop firm or an exchange to be able to execute these trading ideas. Now, when I'm trading crypto, I personally opt for Bybit, but this is truly up to you. The third thing we're going to need is a trading journal, so that we are able to log in our mistakes, emotions, trade rating, and more, to have a look later and find out which mistakes cost us the most and notice things we couldn't have otherwise. And I'm gonna share this one with you guys later in the video so that you can follow along, but more of that later. Okay, so let's first start off with TradingView. So what you wanna do here, you wanna head to products and click super charts, and what this is going to do is pull up a basic chart. Now once again, when we are on TradingView, it allows us to see a visual representation on any pair we are looking to trade. As you can see, if I start typing on my keyboard, this menu pops up, and what this menu does is basically our simple search menu, which allows us to switch between different assets. Obviously, there are many ways to do this a bit faster, for example like having them organized right here, which I'm gonna show you later in the video. What we just did here is basically pulled up a chart against the US dollar. So as Bitcoin's value increases compared to the US dollar, we'll be able to see when the chart is increasing and when it decreases. We are also gonna be able to see the visual representation on all of these instruments compared to the US dollar, or really whatever currency you wanna use for. When we are looking at the chart, there's a lot of important information we can pull out of this. First, it's important to understand what we are actually looking at when we are looking at those candlestick charts. Whenever we see a red candle, it's showing us a few things. It's showing us the open price, the close price, the highest point the price went for that time period. For example, on a 1 minute, for that 1 minute, how high did the price go and how low did this price go? That stands for highest point and lowest point. This candle is going to be red, showing us a net decrease in movements with our highs and lows. If we are looking at a green candle or a bullish candle, it is essentially the exact same thing. The only difference here is that the price opens from the bottom and closes to the top, leaving us with a green candle, and we still have our highest point and lowest point, like we explained before, indicated by those wicks here. So once again, that is gonna show us how price has moved over that period, and we can study how price responds in order to dictate how we are going to place our trades. Now back on TradingView, there's gonna be a menu here which is gonna allow you to switch between different time frames. For example, right now I am on the 1 minute time frame. If I wanna go on the 15-minute time frame, I can either click this button here or just type 15 on my keyboard, and it's gonna do essentially the same thing, just with less hassle. Back on the 1 minute now, on my chart here, I have it so that each one of those candles is worth 1 minute. That means that this candle here is 1 minute worth of price action. Now if we take a look at a black candle, which in this case for me it is a bearish candle, and that black candle is gonna indicate us a net decrease in price action. In this candle, the price opened here, closed here, and these were our high points and our low points. Having the candle to open from here and close here is indicating to me that we have a net decrease in price. In the opposite direction, we see our open, our close, our high, and our low. If we take 1 hour worth of data, I'll have 60 candles on the 1 minute, but if we go ahead and switch to the 15-minute time frame, we see that those 4 candles are indicating 1 hour as well. On the 1 hour time frame, that is just 1 candle. Okay, then I'm gonna show you how exactly we can look at those two simultaneously to be able to give us an advantage in the market. It's really cool and you have to stick out for it. The reason that is important is because I can find areas on the 15-minute time frame, like this fair value gap here, that agrees with our 1-minute time frame to be able to give us double levels of confidence, seeing the same things on a zoomed out perspective and a really zoomed in perspective to allow us to play into the bigger picture of the market, to be more accurate about our entry, which is going to allow us to have substantially more profit. Okay, so basically we can take all of these pairs and all of those time frames and say I want to build a list of things I want to look at and trade all the time. We're going to go ahead and click this button this time. If I want to start trading US oil, I have the option to click this plus sign here and add it to my watch list, and what this is going to allow me to do is switch between different assets without having to do solo USDT. That saves a lot of time. I can do the exact same thing with my time frames. If I click this button here, I am able to bookmark different time frames so that I can access them pretty damn easily. I don't have TradingView Premium. Such a poor guy. And I'm able to switch between different time frames without having to type or open this menu all the time. In my opinion, getting organized is one of the most important things to elevate your trading, as it sort of takes a lot out of your guesswork, and I think that being focused on one thing is better than having to figure out 100 different things at once. I see many traders having their chart like a mess, like for example here. My chart isn't any better. Okay, before we go ahead and actually find trades and look at different analysis, we have to master one simple concept, and that is trading psychology. Oftentimes glazed by traders, at least in the beginning, but without this, I promise you it's gonna be nearly impossible to figure trading out. If you are able to master this mental rewire that I'm gonna explain to you right now, you are gonna leave this video immediately better than 99% of retail traders. Now, as human beings, we were designed a certain way that is somehow the exact opposite way that we need to act in order to succeed in trading. This explains exactly why 90% of people struggle to become profitable traders. As humans, we were predisposed to thinking that being wrong and losing money are things that need correctional changes. It means that something is wrong. And typically, when we do something that makes us money, we view that as good. But in trading, this is the exact opposite way you need to think about it. I'm not saying that you have to think winning is not what we want to do. We do want to win. We do want to make money in the markets. But you have to know where a winner is actually a good trade, meaning that it always follows your trading criteria. On the other hand though, if you risked $100 and you won $20,000 and you didn't follow any of your rules, then that is not a good trade, and that is called gambling. Now, of course, there is no such thing as a 100% win strategy. One thing that you have to understand is that all trading strategies have their wins and losses. The goal of that strategy though is to have more wins than losses. So when you add them up, it gives you a net positive. So we covered step 1 on how to approach the markets the correct way. Step 2 is out of the equation as well. Step 3, trading psychology, we just covered it. And now let's get into the step 4, which I'm pretty sure it's the reason you are in this video. And I'm gonna show you that framework that I use every single day to be able to trade for about 1 to 2 hours and make a bunch of money. First, I'm gonna explain it in a diagram. Then we're gonna take a look at a bunch of examples that basically happened over the past week so that you can basically see how it works on a chart and how I really execute in real time. Okay, step number 1, we're gonna be waiting for our session open. And what I wanna do now is wait for something called change of character. Now, change of character is effectively when we have, say, a downtrend. What needs to happen now is get a candle that pushes above our previous lower high and create even a new uptrend out of that. In this case, our change of character is right here. That is a textbook change of character. It is one of the easiest ones. By the way, if you don't want to do all of that, you can basically search for that smart money concept indicator by Luxalgo, and what this is gonna allow you to do is have those change of characters automatically displayed to your chart, like here, that is also change of character, or like here, that is also change of character. On the flip side of things though, if price decides to break the structure and go lower, that is also a change of character because we got a candle pushing below our previous low. So in general, when we get something that produces a new high or low, so breaking our trend, that is called a change of character. And so basically what I'm doing is looking to identify the first change of character that happened in this session. And step number 2, what I want to see is that change of character, but now I also want to see a fair value gap. Now a fair value gap is basically a pocket of momentum where we see a series of 3 candles. Now what we want to see though is our first candle's high wick does not overlap with the third candle low wick, and that is gonna leave a space between those candles, and that is going to be our fair value gap. What we don't want to happen though is have price action inside that fair value gap. That is gonna indicate us a mitigated fair value gap, and it's gonna have way less power than an unmitigated one. Generally we don't want to have any wick in between here. Step 3, what I'm gonna be waiting for is a pullback into what is called my golden 61.8 ratio, and basically what this is going to show me is premium and discounted zones on a move. In a second I'll explain why this thing is very important and such a good confluence to use. And this 61.8 ratio is a ratio that price for whatever reason typically pulls into before having a continuation in the opposite direction. So what I want to do is take my fib starting from the bottom all the way to the high for an uptrend and have a fair value gap aligned here between my 0.5% and my golden ratio. And what I'm gonna be doing is placing my entry in the midpoint of that fair value gap, and my stop loss will go just about outside my fair value gap producing candle. And as for my take profit, I'm gonna target using my 15-minute time frame an important zone or fair value gap. Assuming that can happen, and it happens a lot, this is gonna allow me to filter fair value gaps and find the most important ones. So on this example, my red zone stands for -1 hour, which in this case, let's say we are risking $100. My green zone though is the zone where I make profit. Whatever this thing says, if price goes all the way up to my take profit, I'm gonna make 7 hour, which in this case is 100 multiplied by 7 equals $700 out of one trade. Now of course I have ways of holding trades a lot longer, but I just want to focus on a solid framework to start with. Now when I start my trade, what I want to do is have price give me a change of character. When I get my change of character, this is a change of character here, I'm gonna reduce my risk to 0. I don't want to have any risk on the table, so price could literally do this and stop me for -$0. The reason for that is because if this is the new uptrend that we're trading, a change of character here is gonna indicate us a potential reversal, and we don't want that. So right now I'll be showing you one of my A+ setups and how I really take them on a real chart. So what I've basically done now is Elliott wave analysis. It could either be a 5-wave structure or a 3-wave structure. In this case it is an A, B, C. As you can see, A, B and C. Ideally I want to also take a trendline fib extension. I'm gonna go all the way from the bottom all the way to the top and again to the bottom, and I'm gonna get those areas. What I'm gonna be ideally looking for is the 2618, which indicates an overextended trend. I want to get a change of character in between those areas and a break of my trend line. Now a trend line needs to have 3 contact points. In this case we have 1, 2 and 3 and a 4th one. Now let's play this out and see where we're gonna place our entry. We got a change of character here and we have another valid trend line. What I want to be doing now is setting my short position right about here, placing my stop loss just outside the fair value gap producing candle. Right now the way I'm gonna be setting a take profit on this is by drawing a Fibonacci from the bottom to the top, and I'm gonna be targeting those in between areas, between my golden zone and my 50%. I just got my entry here. That is also a full take profit. Can I run a bit longer? That is a bullish divergence, so I don't think I'm gonna be holding it any longer. And that is once again 7.3 hour on a single position. If you wanna see a video where I break my strategy down in greater detail, then you can basically see this video here. Now make sure you click the like button, subscribe if you wanna know when I put new videos out, and if you wanna join my private team, I'll have it in the description below. But until next time, I'll see you in the next video.